So my name is Noya Eziani, and I will be your moderator for today's session. As we're all well aware, the federal government recently enacted new tax laws that have changed, Nigeria's tax regime, and everyone is wondering, most people are confused, and, with the widespread misinformation going about how these laws apply to them, it is pertinent that, we hear from experts in the field, about how these laws would apply to us as Nigerians, how the law would apply to, business owners and even professionals. And so TaxStream put together this webinar to shed more light to the ongoing conversation that it's currently out there. Mr. Taiwo Oyedele has done a very good job in, clarifying a lot of all these misconceptions. And, it's just pertinent that we add to the conversation that is ongoing, because a lot of wrong information is out there. A lot of wrong stories are being told, and Nigerians are just taking it all in. And so we have amazing speakers that will be speaking to us today. They're amazing because they are well-versed in the area of taxation. They will be answering our many questions, providing clarity, and, allaying the fears of Nigerians. But before we begin, I would like to just provide some ground rules on how the session would go. It's going to be a Q&A session, right? And after the Q&A session, we would have a demo we're going to be launching the TaxStream's platform. So we're going to be showing you a demo of how the TaxStream's AI platform is going to work. And then shortly after that, we'll be taking questions from the speakers. But if you have any questions, even during the course of the conversation, please put down your questions in the comment section. And once it's time, we would open up the chat box and then take questions from everyone. So I'm actually quite excited. So many questions to, ask, so many information to discover concerning these laws. But before we begin, I'll just start by reading the profile of our speakers. So we have 3 speakers that will be speaking to us today. The first speaker, Mr. Dakpo Adeduro.
Hi, can you hear me?
So Mr. Ade Dakpo, apologies, Mr. Ade Dakpo Adeduro is the head of tax at MoneyPoint Microfinance Bank, where he leads the bank's tax strategy, compliance, and advisory functions. His experience spans corporate and indirect taxation, regulatory compliance, and business advisory, with a proven track record of developing efficient tax structures that enhance profitability and build stakeholder confidence. Prior to joining MoneyPoint, he served as Group Tax Manager at Meristem Securities Limited, a 7-company financial services group, and worked as a senior tax consultant across 2 Big 4 firms. He's passionate about demystifying complex tax issues and advancing Nigeria's tax governance landscape. Let's put our virtual hands together for Mr. Adedapo Adeduro, who would be speaking to us today. I will now proceed to read the profile of our second speaker, Miss Perpetual Badejo. So Ms. Perpetual Badejo is a finance and tax professional with expertise in financial reporting, taxation, and regulatory compliance. She supports businesses and institutions in in translating complex financial and regulatory requirements into practical, well-structured decisions that enhance credibility, compliance, and long-term growth. She is the lead financial reporting and regulatory. She is the lead. She's the lead She's the lead financial reporting and regulatory officer at Zone, a regulated blockchain payment infrastructure company, where she oversees IFRS compliance reporting, statutory tax compliance, internal controls, audit readiness, and regulatory engagement. Operating within a highly regulated environment, she partners closely with auditors, regulators, investors, and senior management to support disciplined financial decision-making. Her experience spans fintech, FMCG, oil and gas, and consulting, including exposure to multinational and advisory environments. So she holds an MSc in accounting from the University of Lagos and a BSc in accounting from the University of Benin. Perpetual is a chartered accountant and an associate of the Chartered Institute of Taxation of Nigeria, with further executive education from Harvard Business School Online. As a speaker, she is known for her clear, practical approach to Nigeria's evolving tax landscape, including the new Tax Act, helping founders, finance teams, and leaders move from compliance thinking to strategic institution-level decision-making. Please, let's put our hands together for Ms. Perpetual Badejo. Thank you for joining us, ma. And to our final speaker, Mr. Kelechi Ibe, the co-founder and CEO at TaxStream. So Mr. Kelechi Ibe is the co-founder and CEO of TaxStream, an AI-powered tax compliance solution built for African businesses. He is a corporate and tax lawyer with over 9 years of experience spanning taxation, mergers and acquisition, finance, and general corporate advisory, with a proven track record of providing strategic advice on high-profile, complex local and international transactions. His career trajectory includes roles as a senior associate at Udo Udoma and Bello Osage, and within the deal advisory team and M&A tax unit of KPMG Nigeria. In recognition of his potential, he was seconded to Latham and Wilkins in London in 2024 through the prestigious International Lawyers for Africa, ILFA. Kelechi actively contributes to shaping the legal landscape as the Secretary of the Taxation Committee of the Nigerian Bar Association's section on business law, the NBASBL. He's an associate of the Chartered Institute of Taxation of Nigeria and is currently pursuing an advanced diploma in international tax at the Chartered Institute of Taxation, United Kingdom. So his expertise has been consistently recognized by leading industry bodies, including being ranked as a rising star in general corporate tax and transfer pricing by the World International Tax Review. Please let's put our hands together for Mr. Kelechi Ibe. And to all our speakers that will be speaking today, thank you very much for joining us. So, I mean, the new tax laws have been enacted, and the question on everyone's mind is, how would this affect me? Is the government going to open my bank account and take money from my account, or will the government monitor transactions going in and coming out of my account, and there's a requirement for narrations? So many Nigerians are confused. Many Nigerians want to know, what this law is about and how best, how best they can, what the law is about generally and how they can comply with the law, right? So Mr. Dapo, what really was the intent of the government in enacting the new set of tax laws, right? What was their aim? Why did they see the need to, in 2025, enact the new tax laws?
All right. Good afternoon, everyone. So when the present administration came in, right, one of their focus areas, which the president had spoken about, was taxation. The issue we had with taxes or tax laws in Nigeria was that many of them were outdated and they were not so fit for purpose. And that is why the committee, the special committee on tax and fiscal reform was set up, headed by Tao Yedele, which has now given birth to this four um, new tax acts that we have, which is the Nigeria Tax Act, Nigeria Tax Administration Act, the Joint Revenue Board Act, where everybody comes together to sit, and the Nigerian Revenue Service Act. So there are many things around which the new tax acts have done. For example, they have tried to look at people who ensuring that we don't tax capital, for example, people's capital, ensuring that incentives are not open-ended. So in Nigeria, under our tax laws, we had so many open-ended incentives that were just going on, and people were taking advantage of them, to the
Yeah.
disadvantage of others. Some of the things that were closed, ensuring that lower income, or low income earners, don't pay as much taxes as they used to pay before now. And different objectives to ensuring that things like our Stamp Duty Act were brought into the modern age, ensuring that new kind of transactions, when these acts were promulgated in those years, we didn't have so much digital transactions. It was mostly physical. If you want to do business, you come into the country. Now you can sit in Dubai and buy a company in Nigeria. You can sit in Nigeria and buy a company in India. So things have changed. People don't physically cross borders anymore to do business. You now
Yeah.
have like crypto influencers and those kind of things were brought into the law so that it's more in the 21st century. So that's the idea around, and various other things around the laws, and the updates that we made. Yeah.
Hmm. So Nigerians are concerned, right? They want to know if it's really needed. Is there really any benefit in paying taxes, and can't they just avoid it? Like, why should they pay tax? Because, people have said that, oh, there's no form of accountability. The previous tax regime, taxes were being paid, but, we're not seeing anything, physically, right, to social amenities, the welfare of Nigerians have not improved. So why should we pay tax? And, why shouldn't Nigerians avoid tax?
Okay. At the risk of sounding emulgators of the act, by definition, right, tax is a compulsory levy that people pay without any direct benefits. If you look at the definition. So when you say direct benefit, of course, taxes, government should be accountable for the taxes for the general people, right? But you may not have one specific thing that government is doing for you because of your taxes. However, the reason why we should ensure that people don't avoid taxes is one, when you don't pay your tax, you as a citizen, you are cheating those who pay, right?
Yeah.
If myself and yourself, let's say we're both companies, we bake cake, right? Um, both of us make 120 million naira in a year. If I pay my taxes because I'm within the tax system and you don't pay, it's unfair to me because it means you can outprice me in the market. We are not competitive. Even though we buy the same raw material, we have the same staff, we pay the same rent. But because you are not paying taxes and I pay, it means you can, yes, say let's use a 30% tax, generally in Nigeria. It means you can price your wares 30% lower and get more business than me just because you're not paying taxes, right? And I often say that it's important that through my social media, through my advocacy, I try as much as possible to always shout out, to hold government accountable as much as I can do within my sphere. But it's always good to separate the payment of the taxes from the holding on accountable. They are related conversations, right? But they are distinct, right?
Hmm.
Um, we should pay our taxes and then hold government accountable for those taxes. And I often hear that we can't. We can, but I don't want to go into political views.
Yeah, of
And what
course.
this law has done is, if you look at people who, because anytime people talk, we're talking about the poor, right? The poor, the low-income earners. To some extent, arguments can be made for both sides, but to some extent, the law has tried to ensure that people who are down the scale, they don't pay as much taxes as they used to, right? For instance, the exemption, not exemption now, there's a 0% rate for income tax, meaning that if you reach that threshold, you would file your taxes, but you will not pay. So you will just complete your tax, you will file, but you will pay at 0%, meaning no tax for you. The threshold for turnover to meet, that 0% used to be 25 million, but now it's about 100 million, you know. For PE, for example, a lot of workers in Nigeria will see their PE, those under direct employment, will see their PE come down, right? Same goes for the threshold for VAT. The registration and filing of VAT for small businesses and companies have also been increased, to 100 million. So they have tried as much as possible to ensure that the taxes are more fair. It's not a perfect set of laws. There's never any perfect set of laws, and there will always be criticism of laws that we have, but it's progress. We can acknowledge that it's progress on where we're coming from and we're going to. And one of the things that I didn't mention before that I do with that is to widen the tax net, right? The
Mm.
tax rates were not increased, but they tried to make it more punitive for you not to pay taxes. So that's one of the reasons, in answering your question directly, you should not evade taxes, because the penalties are now very, very steep and high, and they've given a more broader sense for authorities to ensure that more people are captured in the net. Yeah.
All right, thank you very much. Mr. Kelechi, so Nigerians want to know if it is necessary to set up a business account, a business name. So set up a company as opposed to a business name, in order to reduce their tax liabilities. We've heard stories like, oh, if you set up a company, you're likely to get lower tax liabilities than a business name. So in answering that, can you just provide some form of clarity on what the difference is between a business name and a company, and how each of them are taxed, and then take on the question from there.
Okay, thank you, Noya. Can you hear me?
Yes, I can.
Awesome. So, to the later question, which is the difference between the business name and the company, it's interesting that a lot of business people I speak to do not really understand the difference between the business structures that they use to carry out the business. They just know that they're running a business. They don't know, they might know it's a business name or it's a limited liability company, but they might not really understand the difference. So, just for the purpose of, I'll try to explain as much as I can within the short time that I have. A business name is an extension of the business owner. So a business name does not have independent or separate corporate personality as a company. So if I Kelechi run a company, let's say my company is called Tax Systems Enterprise, it means that I am trading. Kelechi is carrying on business as tax and tax enterprise or whatever the name is. So it means that I am not independent. I'm not separate from that business. The business is me, but I'm just trading under a different name. But it's different for a company. If you're running a business as your business as a company, the company has separate legal personality. It's just your company is separate from you. So your company, and when they say an entity is a corporate entity and has separate corporate personality, it means that the entity has basically has perpetual succession. So that means even if the owner dies, the company doesn't die. Unlike a business name, if you're running a business name and the owner dies, the business name has died because the business name is the business. The owner of the business is the business name essentially. But
Yeah.
for a company, if the owner dies, the business continues. So it has perpetual succession. It can be sued and can sue in its name, which means even though I run my company, let's say my company is TaxStream Technologies Limited. If TaxStream Technologies Limited enters into a contract or does anything and someone wants to sue TaxStream, they would sue TaxStream, not me, Kelechi, because I'm separate from TaxStream. But if I were running my business as a business name, I would be the person who, when they want to sue my business, they would sue me not the
Yeah.
business, because the business. So, and that distinction is important even from a tax perspective as well. So, unlike a company that is independent, a business name is the same as the owner of the business, which means that from a tax perspective, the business name doesn't pay tax independently. It is the owner of the business that pays tax. So remember, I said Kelechi runs business as tax. So I am Kelechi trading under the name and style of TaxStream Enterprises. Now, TaxStream who doesn't pay tax because it's not a separate personality, but it will calculate the tax for TaxStream, but the tax will be paid by Kelechi because Kelechi runs that business essentially. But for a company, even though I own the company TaxStream will pay its taxes separately because it's a separate entity on its own, it's a company, and then I, Kelechi, would pay my own tax as an individual. So those distinctions are important from a tax perspective. And now that then takes us to the benefits or whether you should run one or the other. Now, because of the example that I've given, if you go back again, because I have said a business name is taxed as in the name of the owner of that business, it means that a business name always pays personal income tax, while a company, which is a limited liability company, always pays company's income tax. That means so for under the Nigerian tax laws, the company's income tax rate is 30%. For the company is a fixed rate. While for a business name, because a business name is taxed as personal income tax, it is not a fixed rate, and that's one misconception a lot of people make. It is taxed under the personal income tax table. So there's a whole table that tells you how to do the tax. I don't think we can discuss that on the call. Maybe Perpetua will touch on it later. So now this information is important in making a decision as to whether you want to remain a company or a business name, because under the new set of tax laws, a small company, which is a company that makes 100 million naira or less, is exempt from paying tax. So that means no, their tax rate is 0%. They're not exempt, but the tax rate is 0%. That means they won't have income tax obligations at all, right? But then remember that company is separate from you, the owner. So if you're running your company, you need to find a way to get money as a business owner. How do you get money out of that business? So it's either the company pays you a salary, or you declare dividend to yourself. And under Nigerian law, you can only declare dividend if you have made profit. So if you've not made profit, you can't declare dividend, but you can pay yourself a salary. But then that salary you're paying yourself, you will still pay tax on it under the personal income tax regime. So if you're running a small business, you need to consider what's the benefits really, because that exemption applies only for companies. Of course, it doesn't apply to a business name, which is why a lot of people have been saying migrate to a company. So for a business name, there's no general exemption. So it's only the first 800,000 naira of your income, of your taxable income, that is exempt, which means you pay taxes as based on the tax table. So only 800,000 naira is exempt from tax. That means every other income, taxable income above 800,000 naira is taxable. Again, you have to weigh the pros and cons as to whether you want to, you know, take advantage of the exemption because you believe you will be a profitable business and you can pay yourself a dividend, which is 10, and then the only tax on dividend is 10% of withholding, 10% withholding tax, which is the final tax. So if you know that you can wait till the end of the year, or you can declare interim dividends and only pay 10% tax only when you've made profit on the dividend, then you can take that option. But if your business is not very profitable and you're not sure you can make profits, then it doesn't make sense to do that, unless, of course, you are willing to pay yourself a salary and still pay tax on the salary. So I think it's not a one size fits all answer. You need to consider your business model and decide whether you're going to be a profitable business. I think I only recommend you to do company if you're going to be a profitable business and you're going to be declaring a dividend, in which case you're only paying 10% withholding tax on the dividend at the final tax. If that's not the case, you might as well just stick with your business name model and not necessarily have to migrate. I think without trying to speak too much, I think that's the simple explanation I can give to that question.
Yeah, thank you very much. But for companies, most times they also have to remit withholding tax. They have to remit withholding tax to the government. Wouldn't that be a con for a business owner?
Everyone has to remit withholding tax. So whether you're a company or you're a business name, you also have to. So every obligation, the reality is that every obligation that a company has, a business name also has. So,
Okay.
so there's really no, the only thing that used to be an attraction for business name at the time was that you didn't, the law wasn't very strict in terms of preparing accounts, like preparing audited accounts. It used to apply mostly to companies, but under
Companies,
the
yeah.
new tax laws, I think that has been sort of solved. But I don't think that's something I want to discuss now. But so every business has, you have a business name has VAT obligations like a company. A business name has withholding tax obligations as a company. They have income tax filing obligations as a company. They have reporting. So pretty much the same set of obligations. It's just the tax treatment that really matters.
So, I mean, so each individual has to consider their business model and decide on which to go for
Yeah.
from your answer. All right, then. Thank you very much. Um, so, Ms. Badejo, um, do you think there are any benefits under the tax law, under the new tax law for small businesses?
Okay, so I think I would say that the first one, which is like the very obvious one for a lot of people, and this depends on how you registered your business. So for those that have been smart enough to migrate from business name to, company, they are able to pay taxes at 0%. So even before now, I mean, it has always been there, but before, with the old inflation, a lot of people were no longer small companies because before the new tax act, for you to say you're a small company, it means you're making less than 25 million in turnover. And with the value of Naira, most people were already doing more than 25 million. So they were having to pay tax. They were no longer a small company. But right now, they've increased the threshold. So it's no longer 25 million. Now, even if you're making 70 million, 80 million, 90 million, you can still claim to be a small company and pay taxes at 0%. Not forgetting the other condition that your fixed asset must not be more than 250 million. Then secondly, I think another benefit is that VAT compliance, unlike regular other businesses that are not small, you don't have to worry about charging, filing, registering for VAT. They've taken away those burden from you. And I think lastly, when it comes to the angle of income tax, so before now, one of the things that we tell people when they are trying to decide whether to migrate from a business name to a limited liability company is, hey, look, you have to prepare an audited financial statement at the end of the year, and this will cost you money. Do you have money for that? But right now, they don't even have to do that as a small business. If you can afford to get an independent auditor to get an audited FS, that's fine. But if you cannot, you can just prepare a normal statement of accounts and just attest to it by yourself, and that will suffice. So I think those are some of the benefits that's available to small businesses under the new tax regime.
All right, then. Thank you very much. Mr. Dakpo, so we would like to know, do you think the new tax laws would actually result in an increase in price of goods and services?
Generally, no. So first of all, there are no new taxes, right? The tax law did not introduce any new tax. Taxes we've been paying before, the taxes we're still paying now, right? Even in certain cases, they have sought to reduce, like for certain people under the personal income tax regime, their taxes will go down depending on where you fall in terms of the income you make, either as an employee or just like Kelechi, explained, as a business owner. And they're also seeking to reduce the corporate income tax rate as well to 25%, from 30%. That's for companies that are not small companies, companies that make turnover over 100 million, right? The VAT exemption threshold has also been, expanded. The zero rated threshold has also been expanded. So generally, you can see that there are no new introduction of taxes. And then there's also a very important change. Before now, certain businesses, the VAT, so there's something called input and output VAT, right? When you, as a business, when you buy raw materials, right? When you buy your inventory, when you buy stuff to sell, the people selling to you will charge you VAT. It's called input VAT. That's the VAT on the input into your business. When you sell to your customers, right? You also charge them VAT, right? Because VAT is a final consumer tax, so each person keeps charging once it goes to the final consumer. Before now, certain businesses like service businesses, the input VAT that they had gotten, they could not net it off against the output. It means that they will absorb it as a cost and pass it on to their customers. But what has happened now is that regime has now been changed. You can now, as long as the input VAT is on a taxable supply, you can now net it off against your output VAT. What that means is, if you take a service business, I don't want to specific example, let's say telecommunication business, for example, it means the data, the input VAT they've suffered, they'll pass on maybe their data or voice that they are selling to you. They can now expense it. So they can decide, of course, it's the business decision, to even reduce their price because of that, because they're no longer passing the VAT to you. So those are the kind of ways. However, like I said, VAT is a final consumer tax, right? And because one of the aims of the tax law is to expand the nets, so it means more businesses would now be charging output VAT that we're not charging before, right? And because the final consumer tax, that tax can be an addition, on the cost of what you are purchasing before as a final consumer, right? And then because when I speak, I'm not oblivious to the context of the country we are in. There are reports of people taking advantage, of
Yeah.
things to say, oh, because somebody mentioned VAT somewhere, divided 20%, a 10% on their goods, which shouldn't be, right? And so those are the contexts within which you can see specific increases here and there. But generally for the economy, no. These tax laws should not result in increase in taxes because no tax rates, was increased. Instead, in certain scenarios, they were reduced. However, for people who earn much higher, bigger companies, in some circumstances, they may have to pay more because somebody has to plug in the gap for the low-income earners that were exempted, right? It doesn't look like I'm not talking about them at all, right? Yeah. So
you're saying that generally, small businesses, generally, price of goods and services would not increase.
yes. So even as a small business, let's even take small business, for example.
Okay.
The law now gives you the option. And I mentioned the VAT. VAT is the final consumer tax, meaning as a business, you should not absorb that VAT. But remember, both Kelechi and Petra spoke about the fact that if you are a business or a company and you have your turnover is not to 100 million, you are primarily exempt from filing and registering for VAT. But what that means is you'll be in a refund position if you've suffered input VAT. So the law even gives you the choice as a small business, right, or a small company to say, I want to be part of the VAT regime. Even though the law primarily exempts me, I want to register so that way I can charge my customers VAT and I don't have to bear it as a business cost or be in a refund position where I have to be asking government for money back, all the time, So those are the ways in which they've tried to ensure that, you have the choice to do such things so that you don't have to increase the value, the price of your goods. So generally, I don't think you should have, a price point, but we'll know practically from the, inflation numbers that will really
Okay.
small.
So
Yeah.
on this same issue of VAT, right? So people have been saying that banks have implemented a 7.5% VAT on transfers. I mean, the NRS had to even issue a circular, I think yesterday, debunking this claim. So can you just provide some form of clarity and just add to the conversation? Has there been an additional 7.5% VAT that has been added, by banks? And can banks actually charge 7.5 VAT on transfers?
Okay, yeah. So before I answer the question at this point, I would like to clear I'm not speaking for my employer, right? So I'm speaking in personal capacity, right? So the first thing I would say is to answer your question specifically, no, right? VAT is not new. VAT has existed for a very long time. And VAT is a consumption tax on the supply of certain goods and services. So if you supply a good or as long as that good or service is not exempt, so under the VAT, Act, or now the Nigerian Tax Act, correct now, collapsed into the Nigerian Tax Act, there are some exemptions for VAT, like certain, like baby products, for example. But if what you're selling is not exempt, then you will charge VAT. So I give an example of a good. If you go into a supermarket to pick up some things, if you check your receipt, you'll see VAT there, right? If you go to a restaurant to eat, right? If you want to finish your meal, you will see VAT on the receipt. They will charge 7.5% of the value of the good, which is the food they've sold to you, the processed food, right? The same thing service. If you engage yourself as an accountant, right? When it charges you his fee, right? If you've agreed a fee of 500,000, for example, you want to pay your account as a small business, right? When it charges you that fee, it will charge you the VAT on top of it. It's the same thing for a bank and has always been, right? A bank, when you transfer money, for example, nobody will touch your money, right? There's no tax on inflow into bank accounts. However, when the bank charges you a fee, just like every other company, because the bank is doing you a service, that's transfer. You're using their network, bank networks. You're using their they call it the bank application. You could as well
Yeah.
have gone to a bank, to enter bus, but they made it easy from your room to be able to use the application to send money. So for making it easy with the application to send money, they will charge you a fee. It's what you call bank charges, right, on that transfer. That fee they are charging you is income to the bank. The same way the accountant is charging you is income to him. The same way a restaurant is charging you your food is income to them. That fee, maybe the 15 naira fee on your transfer, or 25 naira or 10 naira, depending on which bank, right? They charge you. On that fee, which is an income, they have to charge VAT. But what we've seen this year is that certain banks before now, they enjoy some exemptions, maybe because of certain things under the old VAT system, right? So what has happened is that those banks, and other companies who have certain exemptions have now ended, now have to charge the same way other banks are charging already. So it's not anything new, it's just VAT on the fee that the bank will charge you for whatever it is they are doing for you. But the underlying transaction, to give an example, if you transfer 20,000 and the bank charges you 15 naira for the transfer, they will charge VAT on 15 naira, 3.75. So you see 20,000, you see 15 naira, 3.75. I don't know if that answers the question.
Yeah, that very, very well. Thank you very much. I'm just wondering how the story of banks charging VAT just got so widespread, and then everybody started keying into it.
Yeah.
That led to the NRS issuing a circular in that regard. I feel like information flies quickly these
Yes.
days, and we
Yes.
should be very careful, about what exactly we listen to. If you're not speaking to a tax expert, please don't just take anything you see online. Speak to a lawyer,
Very
speak to a
true.
tax expert.
Very true.
Yeah, thank you very much. So to my next question. So, Mr. Kelechi, can the tax authority actually debit funds from our accounts? I know Mr. Dapo has already spoken a bit on that, but do you really think, Nigerians want to know, would they actually open your bank account, maybe from the back end, and then, start deducting money from your account? How true is the statement?
Okay. It is true that the government can take money from your account to settle your tax debts, but it's not in the way you described it in terms of taking it to the back door or something. So this, and again, just to say, this provision is not a new provision. It has always been there in the old tax laws, and it's called the power of substitution. And what that means is if the tax authorities determine that as a taxpayer you're owing taxes, they can appoint anybody who is holding on to your money to be your agent for tax purposes they will pretty much tell that person to pay the money that they hold on your behalf to them to settle your tax liability. So they're basically substituting you for your tax, your bank for you, because your bank holds onto your money. So it's called the power of substitution. But as well as the truth, the government has the power to do that because the law empowers them to do so, both under the new law and under the old law. But I think that I owe you guys a duty to give you a fuller picture, because the way it's been peddled, and it sounds as though the government can just take money from you once you don't pay taxes. But that's not exactly how it works. There's a whole process that leads up to this power of substitution being exercised by the tax authorities. And at the first instance, Nigeria operates something called a self-assessment tax regime, and it's the same kind of regime that is actually operated everywhere, almost everywhere else in the world, which is you, the taxpayer, will be the one to disclose your income and disclose your expenses and disclose your profits, and then calculate your tax yourself and file your tax and pay. So the government doesn't do that for you. You are required to do so as an individual or as a business. Now, after you've filed your taxes and filed your returns and paid your taxes, the government has the right to decide whether what you paid is actually your accurate taxes or not. Maybe you're underpaid or you didn't pay at all. For some people, they don't even pay at all. For some people, they paid less taxes. So the government carries out something called an audit. An audit is a process where the government tells you to submit your books for them to confirm that the income you declared and the taxes you paid were in fact correct. Now, usually what happens is, if you have been filing returns, they will do an audit and then they will ask you to give those information. And sometimes they will tell you, in fact, a lot of times, oftentimes, they will tell you you have an additional tax assessment, which means they don't particularly agree with the original disclosures you made. That means you have a tax liability, an extra tax you are owing that you're supposed to pay. Maybe you didn't calculate your taxes well. Maybe you did not disclose all of your income, so you didn't pay tax on everything. There are different reasons why you may not have paid the correct taxes, and they have the right to tell you what they think your tax should be based on the information they have gotten, either from you or from another third party, right? They can now take a position. Now, when the tax authorities have taken a position as to what your tax should be, they would issue something called a tax assessment to you as an individual or as a business. Now, the law says as a taxpayer, you have 30 days after you've received that tax assessment to either you pay the tax if you are not disputing the assessment, or you object to what the tax authority is saying you should pay. So you need to submit something called a notice of objection within 30 days after you have received the tax assessment from the tax authorities. So it is when you have not responded to that assessment within 30 days that the law says that tax assessment now becomes final and conclusive, which means because you did not dispute the tax, you did not object, you have pretty much agreed that that's what you are owing. So that whatever the government said you are supposed to pay is what you will pay. And at that point, after the assessment has become final and conclusive, the law says the taxpayer is now owing a debt to the government. That means it's no longer a matter of dispute. You're owing because you didn't object within 30 days. It is at that point that the government can say, okay, I gave you an assessment, you did not respond within 30 days, the assessment is final and conclusive, which means you're owing us 10 million naira. They will then write to your bank to ask you to, they will then write to your bank and give your bank the details of what led to that position, and then ask the bank to transfer the money that is in their possession to them to settle your tax debt. Now, this happens if you do not object. But if you object to the assessment, which means when they give you that initial assessment and you look at it and you say, no, I don't agree with this, and you write a letter in response to the objection, they also have a duty to respond to you within 90 days. Now, their response can be either of two things. They can say, okay, we agree with your explanation. Okay, you're not owing the taxes we say you are owing, so we would cancel the assessment, no problem. Or they could say, based on your response, we're saying you are owing 10 million, but we think you are owing 5 million because you've been able to explain the other 5 million. So instead of paying 10 million, pay 5 million. They will respond to you. Or they could say, we don't agree with anything you've said, so we are issuing you a notice of refusal to amend. It's called a NORA. That notice of refusal to amend is saying, okay, I've heard your objection, but I don't agree with your objection, so go ahead and pay the tax. Now, if you receive a NORA, a notice of refusal to amend from the tax authority, at that point, what you're supposed to do is to file an appeal at the Tax Appeal Tribunal to object to that assessment. Now, in all of these processes, they don't have a right to ask the bank to make any transfer because you're following a process to determine whether indeed you have a tax liability. And that process can lead up to the Supreme Court, right? Even if you go to the tax appeal tribunal and they say you are owing, you can appeal to the High Court, appeal from the High Court to the Court of Appeal, and even to the Supreme Court to establish whether indeed you have a tax liability. And it is only when your tax liability is established that they can now take any other step to recover money from your bank account. So the problem would be if, as a taxpayer, you receive an assessment and you refuse to respond and 30 days has passed. It's at that time that the tax authorities can now appoint your bank to transfer your money. Now, let me also say, at the bank level, there are some rules that the banks might also set. So the banks can say, oh, we cannot just transfer money from a taxpayer's account. You need to go and get a warrant from the NRS, or you need to bring an affidavit, a sworn affidavit, or you need to go to the magistrate's court to get an order. So the banks usually specify the process they want to follow in releasing the funds. So even though the law says the government can appoint, the tax authority can appoint your bank to transfer your money on your behalf, if your bank has a procedure in-house that needs to be followed before they make that transfer, they still need to follow that process before the transfer is made. But I would advise you not to wait to that point. If you get an assessment at any point from a tax authority, don't put it in a folder somewhere and forget about it. Speak to a tax consultant, speak to a tax lawyer, and they will guide you on how to respond so that you don't find yourself in a position where the government now writes to your bank. And like I said, this provision has always been there for a long time, but it was never really exercised. I mean, it was only in one instance that they tried to do it and the banks even pushed back. But the reality is that nothing says they cannot do it. But I think that they'll be targeting bigger taxpayers, like the rich people, because, tax collection is a function of cost. So they can't spend money just to collect 1 million naira, 2 million naira from you. They only target the high net worth individuals, and like Dakpo, the HNI is like Dakpo, they're the ones they will target to deduct money from their bank account. So yeah.
Okay, so I mean, it's only when they've accessed you and you fail to pay that they can, call on the banks to pay on your behalf. So in your view, do you think adding narrations whatsoever would, help individuals avoid tax? Because, people believe that, using gifts as narrations or using, any form of narration at all would help, reduce their tax liability or help them avoid paying tax. So what do you think? What do you think about this?
Are you asking me?
Yes,
Okay.
just like.
Yeah. So, I mean, this is an important aspect as well. A lot of Nigerians have been saying, oh, always put narration, family support, Amala. Because I saw Amala online, I was like, how does this solve anything? Or gifts or
10 million naira.
So the reality is that yes, narration is actually important, right? From a bank transfer perspective. And the reason is that when there's an audit, the tax authorities would always request for your bank statement. And so the narration on your bank statement is important to determine, what the transaction is. But that's not the only thing they rely on. They look at a lot of other things, your financial statement, your general ledger, which, your trial balance, which is also somehow tied to your bank transactions anyway. But they will look at the entire bucket. But then the angle that Nigerians are coming from is not exactly the right way. Like I said, narration is good and important to specify transactions. It has to be clear. But it's not supposed to help you avoid taxes in the sense that Nigerians are using it, because the tax law says as an individual or as a business, you need to disclose your income yourself and pay your tax. It's called self-assessment. So you have a duty at the time when you're disclosing your transactions, when you're disclosing your income, to disclose full, correct transactions. It's an offense actually under Nigerian law to mislead, to give wrong information to the tax authorities. Is actually an offense punishable by a fine and an imprisonment as well. So you have a duty as a taxpayer to disclose correctly what your income is and pay your tax based on what you disclose. Now, at the point when you're filing your tax returns, you're not supposed to submit a bank statement. You're not supposed to submit your anything. You're not supposed to submit your bank statements. You're only supposed to submit if you're a company, you're supposed to submit if you're a small company, you submit your simplified account, your there's an abridged account called a statement of account. That's what you're supposed to submit. If you're a large company, that means you're making over 100 million. You're supposed to submit an audited financial statement. Now, it is at that level that that is what the tax authorities will use at a preliminary level. It's not really your bank statement. You only need your bank statement when there is an audit. That means the tax authorities have come to say, we don't agree with what you've done. So show us more information, give us more information around your operations to help us determine your tax position. That's the time when your bank statement will be important. Now, they would use the narration, of course, but because in law, there's something called substance over form. What the tax authorities will be looking at is what was the substance of the transaction. It's not what you called it. If you called it gift and it was actually income, they will treat it as income. And in any event, there's nothing in the law that exempts gift from tax. I mean, that's my position. Some people do not agree, but I don't think gifts are exempt from tax. Even if someone sends you money and they call it gifts, you still have to pay tax on it. And I've heard a lot of people say, oh, you don't pay taxes on gifts, that gifts are exempt. There is no way in the tax law that gifts are actually exempt. In fact, honorariums are taxed, grants are taxed, donations are also taxed, so there's really no clear exemption for those categories for gifts. So I think to wrap up this response, right, do your narration if you must, right? But the reality is that when there's an audit, the tax authorities will look at the substance of the transaction over the form. So if the substance doesn't help your position, if the narration doesn't, if they look at the narration, it doesn't make sense to them, they would always disallow it. And which is also an important thing it's also important to mention that you need to keep your books. It's not enough to have a bank statement. Bank statement is not bookkeeping. It's just transactions. You need to have an accounting system where you log your debits, your credits, and you categorize your transactions properly, and I know it sounds complicated. A lot of businesses can't afford to get accounting software. They can't even get an accountant to do the daily bookkeeping for them. And that's where automated solutions come in, like TaxStream. We built something that can help you automate accounting because we know that it's a difficult problem for a lot of businesses to handle. So I would say, as a business person, as an individual, prioritize your record keeping, your bookkeeping over the narration. Your narration will help your auditors or whoever is preparing your books in terms of deciding how to treat whatever, but that's not an ultimate determinant of what your tax position would be.
Just for further clarity, so is it that every single amount of money that comes into an individual's account that will be subject to tax? I feel like that's what Nigerians want to know. And I feel like that is why, people are now saying that there's a need to put a narration down. Because generally, the general principle is that tax is based on income. So is it going to be every single money that comes into my account that the tax authorities will consider, or my income, my annual turnover at the end of the day? I don't know if you understand.
I understand your question, and it's a good question. And so the thing to say about it is, which is again what I said about bookkeeping. So yes, it is not every inflow into your account that is taxable, right? But you need to determine what that inflow is. So for instance, you may have lent somebody money and they just refunded the money to you. And once that refund is not taxable, I mean, it's a reimbursement. So you shouldn't pay tax on a reimbursement. Ideally, you should be able to take that out if it is in fact a reimbursement for money that had already been taxed, So it's not an income for your business or to you, it's just money that's being returned. So, but it is not enough to just put it in the narration. I guess that's what I'm trying to say. You need to prepare your account, and it's when you're preparing your account that you now specify what is what. Because let me tell you how a tax audit works. I've sat on so many tax audits. When the tax authorities come, they usually take a position that gives them the most money, right? So anything that gives them more tax revenue, because they have targets, that's the position they take. So usually the approach they would do is they will just look at your bank statements, and every inflow into your bank statement, they will consider that to be income for you either as a business or as an individual, and then they would just slam the tax on the total inflow minus total expenses, even the expenses too. They will check whether some of the expenses are really expenses or whether you're making things up. Sometimes they will disagree with the expenses, but they will take everything that entered into your account as your income, and then they would adjust your expenses based on how they are, whether they agree or not. And then the net amount is what they will call your profit, and then that's what they will seek to tax, or your taxable income. Now, you now have a responsibility to explain every single inflow into your account. That's what happens during an audit. That's why you have back and forth during audit. The tax authority will just tell you, I'm taxing everything that I've seen in your balance. So you now have a duty to say, oh, this 200,000 naira was not income. I did not earn it. It was money that somebody refunded. You will now show where you transferred the money and how the person now refunded it. Oh, this 2 million naira was not actually income. It was someone who sent the money to me to use to buy. I'm an agent, so my business is agency. So I just buy land for people. So the person sent me money to buy land, and my money in this 2 million was just 300,000. The other 1.7 million was for the land. You will show evidence where the money was transferred to the seller of the land, and how. So everything you need to. So that so the point is, you don't. It's not at the bank statement level that you're able to give this granular explanation. It's at the bookkeeping level that you're able to detail these transactions, and then at the audit, we're doing an audit. So you need to keep the trails. You need to keep records. I guess that's the important thing. And it's not just about inflows into your bank account. If you buy something, keep the receipt for your business. You need to keep the receipt so that you can claim your input VAT if you need to claim input VAT, or you can justify your expenses as a business. If you spend money to pay consultant for anything, you need to keep the records, keep the invoices from the consultant, and keep the payment evidence and all of that. At the end of the day, tax is about record keeping. If you don't have the records, the tax authorities will tell you what they want to tell you, and if you don't have the evidence records to justify your position, you won't be able to make a case for yourself. So, and bank statement is not sufficient records. It has to be supported by other supporting evidence like invoices, expense receipts, and all of those kinds of things. So yeah.
Thank you very much. Thank you. Miss Badejo, most business owners want to know if a business owner employs people, right, in their business. So what obligations do they have? And how do they go about complying with these obligations?
Okay, so as a business owner, when you employ people, so the first one on the list is pay as you earn. So the law mandates you to deduct pay as you earn from your employees and remit to the government on their behalf. So if you look at it technically, you're not the one paying, because what you're doing is, oh, you employed an accountant, for instance, and you say, oh, I'm going to pay you 300,000 every month. The government is saying that before you transfer that 300,000 to the person's account, calculate the pay as you earn for that person, deduct it as source, and then pay the person the balance. Now, any business that has even one employee has to comply with pay, deductions, and remittance, right? The second obligation that you have is pension. And for pension, if you have at least 3 employees, then you have to start contributing for pension for them. So pension is two-way. You, the employer, contribute 10% of the minimum of basic housing and transport, and you take 8% from your employees. So alongside the pay that you've deducted earlier, you also deduct pension if you have at least 3 staff, remit to the PFE, right? Let me also add that for payee, unlike VAT that you remit to the NRS, for payee, you remit to the states where your employee is resident. So if you're a business owner that has staff in different states of the country, so you have a staff in Kaduna, you have one in Lagos, you're not going to, and you, the business owner, maybe the business is based in Lagos, you're not going to say that because your business is located in Lagos, you're not going to take all the payee for your staff and remit to Lagos. Payee for your staff should go to different states where they are resident, where they reside, right? The other obligation that you have, even though it's a bit voluntary for people in the private sector, is NHF, National Housing Fund. So you have an obligation to ask your employees if they are interested in contributing towards NHF. If they say yes, it means that every month before you pay them their salary, deduct something and remit to the mortgage bank on their behalf, right? The other obligation that you have is NHIS, but in practice, if you're already doing private HMO, most people don't always bother with NHIS. But if you're not, you also have to deduct NHIS and make provision for health insurance for your employees. And then lastly, there's something called group life assurance. I think if you have about five staff, you have to do group life assurance for them, right? And then, of course, payroll obligation outside the normal ones you deduct from your employee. The ones you have to bear yourself, you have to worry about ITF, you have to worry about NSITF. So yeah.
All right, thank you. Thank you very much. But what of a business owner in a one-man business? What can you say are the obligations the business owner has under the new tax regime?
So if you say a one-man business, okay, I'm assuming that is a sole proprietorship, does not have any
Yes.
employee. So in that case, you're only responsible for yourself. That's the good thing. Your pension is now voluntary. You can choose to make pension contribution for yourself as a business owner. And then for your income tax, you're still going to do your self-assessment at the end of the year. So unlike for employees that you have to do every month, for you as a business owner, you just have to wait at the end of the year, compute all your incomes from different sources, then go ahead and pay your tax.
All right, then. Thank you very much. Just trying to see the questions we have left. Please, if you have any questions for our speakers, kindly put them down in the comment section. And once it's time, we would, open up the chat box to take the questions. Thank you. Mr. Kelechi, on the issue of assets, right? Do you think an individual's assets can be seized and sold to settle a tax liability without court orders?
Okay, yeah, and that's one area that has also been of serious concern to a lot of
Many
taxpayers.
Nigerians.
Because there've been some conversations around the fact that they can sell your assets without court order. The truth is, yes, the NRS rather, forgive me, to take a while to get used to this NRS thing, but the NRS can in fact distrain you of your assets without a court order, but it depends on the kinds of assets. So, the way the law is drafted is that if you have a tax liability, if you have so for money in your account, right, they can do the power of substitution, like I spoke about earlier, and just appoint your bank to take the money. But there are other kinds of assets that nobody's holding on to. It can be your car in your house or any other movable assets, or they call them chattels. They can actually distrain you of that assets and they can sell them to recover your tax. And it has always been the case. It's not a new provision. It's a very old provision. And when you think about it, it makes sense because if you're giving an authority the power to collect taxes, you need to give them powers to enforce the payment of the taxes as well. Because any power that's not backed by enforcement it's not power really. It's not authority. They can't do anything. And that's why if you look at other Western climes, people are compliant with taxes. But not necessarily because a lot of people love paying taxes. Not a lot of people don't like paying taxes. Even the billionaires, I'm sure you've heard about a lot of billionaires relocating from particular states of the Federation of the US to other states. Some people are moving from the UK to other tax-free jurisdiction because they don't want to pay taxes. Nobody enjoys paying taxes. But what makes them pay the tax is enforcement. In those jurisdictions, they have a very robust system to ensure that they collect all the taxes. One way or the other, you must pay the tax. So come back to Nigeria. The government needs to give the tax authorities the power to be able to enforce the taxes. Otherwise, people will not pay taxes and they can't do anything. And one of those powers is the power to actually take your assets from you and sell those assets if it is established that you indeed owe taxes. And the only way it can be established that you're owing taxes is either a court has given an order that you owe taxes. That means you've gone to court and your liability has been established by a court. So based on that court order, they can just the same way they can enforce any other court order, seize a property, seize anything. They can use, on the basis of that court judgment, they can take your assets and sell them. Or your liability has become final and conclusive. You did not object within the timeline required by law, and then it became final and conclusive. That means you're owing a debt. They can distrain. But for them to be able to for the NRS to be able to distrain, or any other tax authority really, to distrain you of your assets, they need to get a warrant from the chairman of the NRS. And now this is in relation to movable assets, chattels, personal assets, maybe choices in action, money, all of those kinds of things. But when it comes to real estate, landed property like buildings and land and fixed assets, generally, they cannot do. They must get a court order to take that property. They cannot take it without a court order. So I have been seeing conversations that they can take your asset and sell without a court order. That only applies to movable assets rather, or personal chattels and all of those things. But when it comes to real estate, real assets, landed property, buildings, and all of those kinds of fixtures, maybe like a refinery or a fixed structure onto a land, they can only do that with a court order.
Only with a court order. All right then. Thank you so much, Mr. Kelechi. So on the issue of tax clearance certificates, do you think, okay, so this will go to Ms. Perpetual Badejo. So do you think there's a need for a tax clearance certificate under this new regime, and how can individuals get one?
Okay, so let me start by answering the question of what is even a tax
clearance certificate,
right?
actually.
So a tax clearance certificate is an official document that is issued by the government saying that you have declared your taxes and you have paid them, right? Now, when would you likely need a tax clearance certificate as an individual? So there are some registration that you would want to do. So if you have a child going to like a government school, I know they do that in Lagos State, at some point during registration, they will ask the parents to come and show them their tax clearance certificate. So in those instances, you might need your tax clearance certificate. For individuals, I would speak to those in Lagos State because that's the one I'm familiar with. To get your TCC is quite straightforward. All you need to do is go to the eTax, the LRS portal, etax.lrs.net. When you go to the portal, it's so simplified. There are like 5 checklists that you must meet for you to be able to get your TCC for individuals. So the first one is that you must have updated your address, you must have updated your profile picture, and you must have been filing your taxes consistently for the past 3 years. You must have paid your taxes, and there are about 5 of them. And by yourself, you can always track the process. Oh, I'm done updating my profile. You see a tick box there. Oh, I have not filed my taxes for the past 3 years. You go ahead and file it, tick it. Oh, I've not paid my taxes. Go ahead and pay it, and then you get your TCC. Then for companies, it's also very simple. For companies, I think it's even simpler. If you have been meeting your monthly compliance, paying your value-added tax, as and when due, remitting your withholding tax, by the end of the year, just go to ETC portal, right? And then you would see your tax clearance certificates waiting for you there. The only time that you'll go there and you'll not see your TCC is if you have maybe a pending audit, an inconclusive audit. In that case, you probably have to write to them to release your TCC. But generally, that is how you can get your TCC. And let me just speak for companies, when can you need your TCC? You probably need your TCC if you're trying to get your license, you're trying to do some sort of registration, you want to get a government contract, or even not even government contract alone. There are some companies that if you want to work with them, one of the documents that they require for vendors registration is your tax clearance certificate. So yeah.
Thank you very much. And so what do you think are the benefits from the expanded scope for deducting input VAT? So on the issue of input VAT, right? What are the benefits, and how does that also apply to a small business owner?
Okay, so I think Kelechi has spoken a bit on that. Kelechi and Dapo, yeah. So before now, for you to say you can claim input VAT, it was only available to manufacturing businesses, and they can only claim impute VAT on the goods, not even services, on the goods that they purchase for, use in production and imported and all. So what that means is right now everybody can claim impute VAT, whether you are a product-based business, whether you're a service-based business, you can claim impute VAT. So far, the service that you are rendering is not VAT exempt. So what it means is if you are a company rendering products that are considered VAT exempt, any impute VAT that you make, you cannot claim it back. That is totally outside the scope of impute VAT, right? But if you are a regular business rendering zero-rated product or normal vatable product, then you can claim impute VAT. Now, what does that mean for you as a business? It will lead to lesser cost for you. So what it means is if I am producing, let's say, dress, and before now, when I buy, maybe someone renders a service to me, maybe let's say I have designers that come to work on the dress, produce the dress. Before now, whatever impute VAT that they charge me and I pay, I have to pass it on to the final consumers. So it's going to form part of the cost of my product, which I'm going to mark up and get the price. But right now, the impute VAT is claimable. So even if you paid impute VAT to somebody, you don't have to pass the final burden to the consumers. So in a way, it's going to lead to reduction in the cost of doing business. That's the overall goal, right? It's going to lead to a reduction in the cost of doing business. So yeah, I think that's it for impute VAT.
So it reduces the cost of doing business.
Yeah.
All right then. Thank
And
you
then
very
let me
much.
also add for small businesses, now there's a clause there, because if you're a small business and you have not opted in for VAT, like I said earlier, if you're a small business, one of the exemptions is that you don't have to register, you don't have to file, you don't have to remit VAT, right? So if you are one of those businesses that have been under that umbrella, what it means is all your impute VAT, you would constantly be in a refund position, right? But the good thing is the government has said that at the end of the year, all you need to do is write to the NRS and they're going to refund you of any impute VAT that you have. But if you're a company, if you're a small business that is trying to manage cash flow, what you can then do is rather than wait until maybe the end of the year before you write to them, get them to refund you, you can just opt in for the VAT scheme so that in a way for you to make back the money that you are paying to other people, you collect VAT on your product, right? And that way, every month, you are able to recoup your money in real time. So yeah.
All right, thank you very much.
Okay.
So we'll be taking just 3 more questions and then we'll bring this part of the session to an end. Just for Mr. Dakpo, right? How do you think freelancers, content creators, and sole proprietors will be taxed under this new tax regime? Freelance content creators have, spoken out loudly, they've condemned the entire law, but how exactly would they be taxed?
Okay. The first thing I would say is the taxation of those category of people you mentioned is not new. One of the ways that the new tax laws have been misconstrued in the media, not media now, on social media now, yeah, the social part of the media, right? Is that it feels like they're introducing new taxes. I did mention that they are trying to widen the tax nets, right? To ensure that everybody pays what they're supposed to pay as tax, the same way those who are already complying are. So taxes for such people are not new. But essentially what you'll be paying as a content creator or somebody in media space or anybody who earns income is personal income tax, right? As an individual, you pay personal income tax. There are certain arrangements, maybe some of these artists, maybe they have companies, right? Kelechi had mentioned the difference between the company's income tax and personal income tax. So if you have a limited liability company that maybe you sign a contract with that collects money on your behalf, that company will pay its own taxes. But any income that comes to you as a content creator or whatever it is you're doing, even if the income is coming in from outside Nigeria, right? If the income is coming outside Nigeria and it's not passive income, it's not dividend, it's not interest, it's not rent, it's not royalty, it's actual income of what you're doing, is also taxable, right? Even if you're a remote worker, and all sorts of people who fall in outside of direct employment, you're taxable under the personal income tax. So what just happens is, unlike employees that the rate just applies directly, what you would do is ensure you keep your records, right? You have your income, you have your expenses. So for the business, you as a content creator, you have expense. You may have people where people produce your podcast that you employ and all that and all that. You deduct it, and then your taxable income, you pay tax on it. So like I said, if it is taxable, you pay your personal income tax as an individual. Yeah.
All right, then. Thank you very much. Please, if you have any questions, put that in the chat box. We will not be taking live questions. So we'll only take questions that have been put down in the chat box. So in conclusion, my dear speakers, what can you say to Nigerians, as a form of encouragement with the enactment of these new laws, right? I would allow Mr. Kelechi Ibe go first, just as a wrap up. What can you say? What would you tell Nigerians, and how would you help allay the fears that they have, concerning the new tax laws?
Okay, thank you, Noye. Just to say that I understand that a lot of Nigerians are concerned about compliance. I don't think Nigerians particularly do not want to comply. I don't think Nigerians want troubles, because I've dealt with the clients where the government authority, tax authorities sealed up their offices. They couldn't access their premises for some time. I don't think Nigerians want that, but I think that what has always been the issue has been the cost of complying. Because when you think about all of these obligations, you need to file monthly VAT, file with monthly withholding tax, file annual CIT, do this disclosure, prepare this account. It's very overwhelming for most businesses. And that's actually why we started TaxStream. TaxStream is an AI-powered tax compliance solution that makes tax compliance very seamless for every business of all sizes, from your registration to your tax calculation to how we prepare the tax returns, and then even filing the tax returns and paying the tax. The entire process end to end is automated, and it handles your monthly VAT, your monthly withholding tax, and your annual CIT. Also does your bookkeeping. So don't be worried and flustered because of what seems to be a huge compliance burden. We are sorting that whole process out for you, and that's a part of why we called for this webinar, so we can tell you. And if you can, the next segment is actually a demo of the product. We've actually built out the product. We would like to show you what that product looks like. So when it's my turn, I'll show you what the product looks like. But I think that's my 1 cent for Nigerians. Don't be worried too much about how to comply. We would sort you out. Yeah, thanks.
All right, thank you very much. Ms. Badejo, do you have anything to add, just as a wrap up to Nigerians concerning the law?
Just to add to what Kelechi has said, I think what I would just say is that take it easy with the social media headlines, right? They are just there to make you scared. This thing is not as bad as they're portraying it on the media. So as much as you can, guard your heart. Make sure that you're, listening to just verifiable source. Every single week there is one agenda or the other about this, tax reforms, things that are not true. So it's not really as bad as they are really painting it. And I mean, with solutions like TaxStream in place, I don't think you really have any problem with complying.
Thank you very much.
All right.
Mr. Dakpo.
Yes, thank you. So I just piggyback what both of them have said. My advice would be, please just keep your records. It's not just for tax. Even you as a business, you can think big. You need grants, you get things that you need, ensure you keep your records. It's very good what TaxStream is doing. And I enjoy everybody to please wait back and listen. And I think it's a very good product myself. And it's something that can help, especially because in Nigeria, you have to keep records for 6 years. Tax authorities have the authorities to go back that far. So when you have an AI tool that has kept those records, you have no issues with saying that, you don't know where they are. They are always stored, somewhere for you. So please don't panic. Just ensure you do your business well and comply. It's not that deep, just like Petra said, as people are taking it, it's not that deep. Thank you.
All right, then thank you very much. And for me, I would just like to add that, just like I mentioned before, try to speak to people, for business owners, find a lawyer, speak to a lawyer, find a tax expert or an accountant, speak to them, consult people that you believe are, experienced and have knowledge of this particular area to guide you. And if you don't have the resources for that, I mean, you can go online, go on YouTube, watched numerous videos that Mr. Oyedele has put out to clarify, the various misconceptions out there. And yeah, that's just basically it. Thank you very much, everyone, for sitting through up to this point. So we're moving on to the next segment, which would be the demo, right? We'll be showcasing what TaxStream is and how TaxStream can help, businesses with tax compliance. So I'll call on Mr. Kelechi Ibe to take us through the stage here.
Thank you, Noye. And I think I just want to say one more thing before I start the demo. One of the things that most businesses do not realize is it gets to a point where you now start running around to comply when you should have complied since. I mean, in fact, just 2 days ago, someone reached out to me that they were trying to register their business with another business. So they were providing a service and they wanted to integrate their service with another established structure. They were an upcoming business, but they have an established structure. And those ones, part of the requirement was that you need to bring a tax clearance certificate. And the guy didn't have. And at that point, was like, how do I get a TCC? And he was filling out the form and they asked for it and he didn't have. And I was like, oh, have you been filing your returns? He said no. I was like, oh, that's a problem. So you see, most times, if you need, when you now need it is when you realize you've not been complying. So if you have a solution like TaxStream, there's no reason why you shouldn't be complying, really. So this is supposed to be a very quick demo. We're not going to go into like the entire details, so we do not bore you. So I've already created an account, and the first thing you see when you create an account and you sign in, you verify your account and you're signing is that you'll be asked to speak about your business. So I'll just say TaxStream Technologies Limited. I already have my addresses put in, so I'll just put an email address for TaxStream. So hello@taxstream.com, or let's say info@taxstream.com. There's my phone number. This one so you're supposed to put your proper RC number, and your RC number will be verified. So we have a verification system that verifies whether the RC number ties to your name. So if it doesn't tie, then we might have a problem. So you have to give us your correct RC number, and the idea is to get a profile for your business. But I'll just for this. So this is a test environment. So I'm just going to put a random RC number that we don't need to verify. Then put website. Okay, this website is optional, so I don't have to put the website. I can leave it. Now I move on to the next screen. Now, it asks you for your tax ID. I hope we know that we've moved away from the era of TIN to tax ID. TIN used to be for FIRS. Then you needed to get a payer ID from your from the state tax authority. But under the new tax laws, everything has been harmonized. You no longer need a payer ID and a tax and a TIN. You now need just one thing called a tax ID. And you can put your tax ID here if you have your tax ID, but we've also made it possible for you to retrieve your tax ID here automatically if you want. So you click on, so I don't know if you saw what I did. You just click on retrieve here. If you don't have your tax ID handy, you click on retrieve here and it pops up. So this is the retrieval button, portal. If you are a business name, this is where you go to individual. You put in your NIN your NIN and get that's the NIN of the sole proprietor of the business, and you put it in. But we are dealing with a corporate, so I'll just go here, select company. Then I'll put in my RC number, and then I'll verify tax ID. You see, it pulls up a tax ID for me. So this is the tax ID I'm supposed to use. So I'll just copy the tax ID, close this button, and paste the tax ID here. And then continue. Right. Now you're supposed to give us your tax pro max details. Now we need your tax pro max details to do your filing. So tax pro max is the portal where you do your VAT, your withholding tax filings as a company, for companies, and your CIT filing. So for us to handle the filing, because our solution does everything for you from start to finish. So for us to be able to handle the filing, you need to give us your tax pro max credentials. Now if you don't have the tax pro max credentials now, you can skip this process and come back and give us the credentials later. And we have a portal where you can register, but you'll see that later on when you get into the dashboard. So if you don't have the details now, maybe you've not registered on Tax Pro Max before, you can skip the process. I'll just skip this process. So the next thing is I'll do something called an AI-powered onboarding. So I want TaxStream wants to understand what your business does so that it can actually help you comply with your taxes. So you go to proceed, and it prepares your profiling for you. So now I'm a company, so I'll pick. The question is whether you should identify whether you're a company or a business name. So I say I'm a company, and then it tells me, as for my revenue threshold, am I let me just say I earn over 100 million naira as a business. But I can go back if I'm not comfortable with the response that I gave and pick another response. My network is lagging. Okay. So yeah, but I can go back if I want. I can reset my response, but I'm not going to do that. I'll just stick to this. So it's asking me whether I have a state payer ID. I mean, some states will still ask for payer ID, even though the tax ID regime has been introduced, but it's still a new rule, so it may not have taken effect yet. So we still collect that information for the purpose of harmonization. But I will just say no to this answer, just so that I can move on quickly. Now the next question is, does your business sell goods or services? So I'll just say that I provide services. Now I have to answer what kind of services I provide. So we are a technology company, so I'll pick that I do information technology, and I also do okay, what we are doing is financial services as well. So I'll pick financial services and information technology, and I'll move on. And then it has to now ask me the specific thing within that category I do. So I'd say I do software development and programming, I do website design, and then, well, there's no other option here for what I do. So I'll just pick these two and then submit and keep it moving. Now, there's a question here around, what kind of service, how I comply. So do you regularly handle your VAT and withholding tax? How do you handle that? And you have to answer, do you file every month? Do you file when you remember, or do you just wing it? So for me, I'll just say I do not comply regularly because I'm not using TaxStream to comply. So I'll just say I'm not complying. The next question is, how do I typically source for my goods, right? Do my customers sell on credit to me, like when I'm buying, or do I do over the counter? Do I buy? I just walk into a store and I buy. Do I import from other countries, or do I pay through online platforms? So I'll just answer. I'll pick everything that applies, but you can pick what doesn't. If you just pick what applies to you, and the idea is you're trying to know how your withholding tax obligations are formed, basically how you are supposed to comply with withholding tax. Then it's asking me whether I remit my withholding tax to the relevant authority, and I'll say no, because I'm currently not really doing so. The next thing is, it's asking me, how do I receive invoices from my vendors? So, and that's important from a withholding tax perspective as well. So how do your vendors send you invoices? Do they send you electronically via WhatsApp? Do they send it to you by email, or do they give you paper invoice? So I pick all three because I receive invoices through all three media rather. Then another question is, how do I receive payments from my customers? So do they do bank transfers or POS or online payment gateways? I'll say all that applies. So I confirm. Then the next question is, who are my typical customers? Everyone is my customer: individual customers, small businesses, large corporates, government agencies. So I pick all that apply. The next question is, do I receive withholding tax credit notes on my Tax Pro Max or my SIRS e-tax portal? I'll say no, because I haven't been filing my returns, so I might not be getting that. Then the final question is it the final question? No. The second to the last question is, do I export goods or services outside of Nigeria? And that's important to determine your VAT obligation. And I'll say yes. And then the final question is, what's my biggest challenge as a business? And I say I just want to I want to improve audit readiness and reduce tax liability. So I'll pick that. Now, interesting thing is, once you do this, our system generates a tax report for you, and it is customized for your business, customized to you. So it's generating a report. So it's not a one. So you see that the report is tailored to your specific business. So it has given me a report. I think, yeah, you can see the report. So TaxStream compliance profile report for TaxStream Technologies Limited. So this will carry the name of your business if depending on what you picked. Then this is the snapshot. I had answered I'm a registered company. I provide ICT services. My revenue is over 100 million. I did not provide Tax Pro Max details, so that means I'm not registered for Tax Pro Max. Then I do not regularly file my VAT. I do not handle withholding tax compliance. I'm not tracking my input VAT. So all of those responses have been captured. Now it gives you a tailored response, right? Now it answers that your annual turnover exceeds 100 million. So under the January 2026 tax regime, you are a large company for VAT purposes, and it tells you what you are required to do. That means you're required to register with the NRS for VAT collection. You need to charge 7.5 VAT on all your local software and web services, but you apply the 0% rate for exported services, because under Nigerian law, exported services is 0%. So you apply this, and then you must file your monthly VAT by 21st of every month. It gives you a snapshot. Then it tells you, as a large company, failure to charge and remit VAT creates a significant liability for you. So it goes on and on. It tells you, so for instance, now this is an example. It tells you the input VAT you are missing as a business if you're not complying. And it tells you, for instance, that you have suffered input VAT on tech infrastructure of 1.1 million, professional services and rent, 750,000. This is just an example of items you can claim input VAT on, that if you're not doing so, you are missing money. And it goes on to tell you that if you're not tracking your input VAT on your 30 million estimated spend, you're losing about 2.2 million annually in potential tax offset. So this is just an estimate, right? Then it gives you a snapshot. Then it tells you what your withholding tax obligation should be as well. For individuals, this is the withholding tax rate. Depending, for companies, these are the withholding tax rate. For your rent payment is 10%. So you need to note that you must deduct 10% when you're paying your rent. So in essence, it gives you a customized report. So for your income tax, it tells you that you are over the 100 million turnover band. That means you're a large company. That means your CIT rate is 30%. So it says, as a large company, you're subject to 30% CIT and a 4% development levy on accessible profits. Export proceeds must be repatriated to qualify for exemptions if you're exporting anything. This is for personal income tax, so it's not populated because it's not applicable. It gives you a compliance score. So for my business, I'm just 1.6 over 10. That means I'm not doing well. And it tells me what it means for you, for me as a business. It tells me that I have accumulated unremitted VAT liability of over the 100 million, and then I'm unable to claim to get my TCC for government contracts. There's withholding tax penalties for non-deduction on vendor payments, and I'm losing 2.2 million naira yearly in input VAT refunds. And it tells me all the things I'm meant to do and that I'm not doing. So this is pretty much what the report looks like. So I'm going to go on to show you what the rest of the product is. I'll show you what the rest of the product is. So you can see the dashboard. Now, my dashboard is empty because I don't have anything. Now, how do I get my transactions into the system? There are two ways. I can connect my bank account. So this is an option to connect a bank account. There's a product called Mono. Mono allows you to add your bank account. I'm not going to add it on the call. You can connect your invoice platforms. This is where all your invoices are pulled in. So for now, we support Gmail. So if you add your Gmail account where you receive invoices, our system will automatically extract your invoices, invoices sent by your vendors to you for tax compliance and for calculation of withholding tax obligations. I can add my accounting software. For now, we support QuickBooks, Xero, FreshBooks, Sage, and Zoho Books. So you can add any of these to your account, and it pulls your transaction information. And then you can add your WhatsApp account as well. If you receive invoices on WhatsApp, it also comes in through the system. So, but for now, I don't want to add anything. What I want to do is I want to manually upload my transaction table. So I have a transaction table I had prepared. So I click on upload manually. I'll select a file. So what we have done is we give you a template that you can download. So this template is an Excel template where you can populate, put in all your transactions. It will tell you the details that we need. but I already have one that I have populated for the purpose of this demo. So I'll just pick the specific transaction I have populated and I will upload it. So I'm uploading a transaction for 2026 January and I'm continue. It has been successfully uploaded. You can see it here. Now, when I go to my dashboard, you will see that that information has come in. You can see, based on the data I populated, I have total revenue of 8.5 million naira. Now, you can see at the bottom here, it is still calculating the tax. So you can see that it's loading. This is still loading. By the time we come back after some minutes, you will see that our AI is actually working. Now that you've put your transactions, it is classifying it into income, expense, income, and then it is determining what taxes should apply, whether it is 0 rated or 7.5% or exempt. So I'll show us later while we go through other things. So this is still happening. There's still a classification happening. Here, we allow you upload the invoices. So if you have connected your Gmail into the system, all your invoices will appear here. Either it is cleared for payment. If the vendor invoice is fine, there are no issues, it will be cleared for payment. If there are issues, it will not be cleared for payment. If you're expecting any payment, it will show here. And then if you have paid any of the invoices, it goes into settled. But you can manually upload invoices by clicking here and just pick, okay, you can't see my full screen, but you can pick an invoice and upload. But I'm waiting for the AI to finish the classification before I do that. Now, AI is still doing classification. And so I was going to show you the taxes screen, but we can't show you anything on tax because our AI has not calculated the tax yet. Once the tax calculation is complete, you will see that under the unified tax, under your taxes rather, it will show. But I need to give it some time to populate. We also have an inbuilt AI assistant that can answer any tax question that you ask. We are training it. It's currently being trained at the moment. So, but we've been testing and it's been giving us very fantastic, accurate answers based on training that I have trained as a tax expert and other tax experts. We've been training the system to give you correct answers. So you no longer have to go to ChatGPT because ChatGPT will give you wrong answers because ChatGPT is not trained on Nigerian law specifically. It just gives you generic answers based on what it finds online. But our system gives you specific answers based on Nigerian law. We've trained it and it's the most intelligent AI tax assistant you would find anywhere in Nigeria. So I'll just show you other features while I'm waiting for the AI to classify. So here you can see all the transactions you uploaded. Under the settings, you can change your password. You can do a lot of things. Now, if you need assistance from within the system, maybe you're using the product and you have a problem, you can click on help and put in the issue, select the category of issues you have and submit a request and we would get back to you. Our support team will get back to you. Then another interesting thing is that you can add a business. So now I created for TaxStream Technologies Limited, but I can actually add another business. So if I'm a business owner and I have multiple businesses, all I have to do is come here, click on add new account, and I will be able to add another business account to this profile. So anyways, back to our dashboard, our tax calculation has been done. You can see that our total withholding tax is 437,000, total VAT is this. Now I'll show us an example of what this calculation looks like. So for this transaction, if I click on it, I don't know if you can see the pop-up here. There's a pop-up here, and it gives me the description, transfer for sale of sanitary parts. So as a business, this is based on the data I uploaded. So it doesn't really relate to my business. It's just a randomized data, but it is able to calculate based on the data I've given. So it's able to tell that, this was for sale of sanitary pad, which means that I'm not supposed to collect VAT because sanitary pads and those products are VAT exempt. So it has categorized it as VAT exempt. And it has also mentioned that withholding tax had applies to that transaction. If I was selling it to, a particular customer, the withholding tax would have applied. So it has identified the category and it has confirmed that this is an income to me as a business. Now, the interesting thing about our transaction is that our AI assigns a confidence score. So AI is 100% sure based on this description that this transaction is VAT exempt. Now, if there was no description or if the description was inconclusive, the confidence score will not be 100%, it will be lower. And our system has been built in a way that if the confidence score is lower than 100%, it will flag it, and you can decide what you want to be flagged. So I can say that, oh, I only want to flag transactions that are less than, that confidence score is less than 50%, and it will flag it for you, and that means you can review the transaction. Let me see the one that has VAT. Now, okay, so this transaction says there's VAT. When I open it, this is an expense. So it shows that I made transfer for audit fees. So my company paid audit fees. So it's an expense, and I paid VAT on that transaction. So that means for input VAT, it is tracking it. And it also means that I'm supposed to deduct withholding tax on this transaction. So this is just an example. I can't go into the full details. But when you now go to the taxes, now you can see it has been populated. Before it was not showing anything. But now you can see that it has populated VAT and withholding tax that you have not filed. So this is total unfiled tax returns. You can now open each tax return. You can see total sales is 1.2 million, and then this total VAT rather on the sales. And then you can approve. Once you approve this, our system handles the filing for you. If you reject it, it doesn't do the filing. So you will have to do the filing by yourself, but you can download the full tax report to see. This is just a summary, but this is a fuller report. So the beauty of what we are building, like I said, is we automate the process for you end to end. As long as you give us your integrations, as long as you add your bank accounts, the number of bank accounts that we submit. Let me see if Mono would show. Let me see if there are if I can show us the businesses we currently support on. Okay, I'm unable to show that now. Hold on. Sorry, I can't move my screen further. Okay. Yes. So as long as you give us this information, you add your bank account, you give us your Gmail, we are able to handle everything for you end to end, right? And you won't have any headache with your tax compliance. So, if you're here and you need a tax compliance solution, welcome you to use TaxStream. We also encourage you to speak to your friends, your family members who need a tax compliance solution. And TaxStream is really cheap. If you go on our website, which we will share on Monday, you can see the pricing there. It's a very affordable solution, and it handles everything, does your accounting. So here you can see, you can actually download reports. I don't think I had shown this part. So this is actually a reminder. These pop-ups are reminders that I have not done my tax pro max. So it's just reminding me to make sure that I do my tax pro max. But I can download reports. So it shows me total VAT payable, total withholding tax, total refund. So these are different reports that I can download. And in a short while, you'll be able to download accounting reports as well. Your income statement, your balance sheet, your cash flow statement, and everything else. So that's it. I think I've taken enough time. I think we can go back to the rest of the program, but that's what TaxStream is. That's what we can do for you. Thank you.
Thank you very much, Mr. Kelechi. And to our participants, if you are interested if you have further questions on how you can apply or use TaxStream for your business or for your organization, please reach out to Mr. Kelechi for further questions. So right now we'll be opening the chat box for questions, right? We have a number of questions, and some of these questions were answered during the session. So I would just, select the questions that I believe that our participants have not answered so that we don't spend too long on this session. So the first question here, good afternoon. Please, my question is, when as a company you charge another company VAT on services, then the company doesn't pay, claiming it's a withholding tax from their end, do I still file their VAT or ignore totally? I don't know if Mr. Dakpo can take this question.
All right. Please, can you take that question again?
Okay. So
When
it says,
okay.
yes, when as a company I charge another company VAT on services, but the company doesn't pay, claiming it's a withholding tax from their end. Do I still file their VAT or ignore it totally?
Oh, okay. So I want to assume that you're talking about some unappointed agent. So let me explain the basis. So under the Nigerian Tax Act, and formerly under the VAT Act, right, is not new. The NRS, the FRS then, and now the NRS, has the powers to appoint a taxpayer as a withholding VAT, agent. So what that means is, for most companies, when a vendor provides services to you, they will charge you VAT and then you pay that VAT. But because there are certain companies that are very big and the FRS or the NRS now want to aggregate the VAT at their end, they don't want to pursue so many small vendors charging them VAT. So they say we appoint you as an agent to withhold this VAT. So when your vendors charge you VAT, you don't pay them, you withhold it. So the first thing I'd like to say is, for this kind of company, please confirm that they actually are withholding VAT agent. Not everybody is, so you have to confirm that they are withholding VAT agents. And then once you have that confirmation and they have withheld from their end, they are the ones that are required to file that VAT by 14th. So it means the obligation to file is on the withholding VAT agents. They have to file. Normal VAT is filed by 21st, but the withholding VAT agent, whatever VAT they have withheld at source, they are meant to file it by 14th. But please confirm that they have been appointed as a withholding VAT agent. If they have not, you may have to escalate such issue. I don't know if you could hear me. That question was answered.
I heard it, Dr. I don't know
Okay,
if
thank
Maya is struggling with her internet.
Okay.
All
Maybe I
right.
should have okay. All right.
Yes, I heard you perfectly. Thank you very much. Thank you. So the next question. So this person is asking concerning the dispute. I guess probably flowed from the conversation we had earlier. Please, who will pay for all the court processes during these disputes? Assuming I finally win the dispute and I'm not supposed to pay what the government said I still owe, can I charge the government for the cost of my court cases? Mr. Kilichi, I don't know if you can take this question.
Yeah, so well, the tax laws do not specify whether you can charge the government for the costs of the court cases, but you can legal expenses are allowable deductions. So if you spend money going to court, you can deduct the cost of that litigation from your income, and so it's an allowable deduction, legal fees. So if you pay legal fees, you can deduct the expense. Also, when you are in court, if you think that the assessment was frivolous and the tax authorities were just out to get you, when you get, of course, when you're making your arguments, your lawyer will have to pray the court to also grant something called cost. So when the court is giving judgment, most times they don't just decide on whether you have a tax liability or not. Sometimes they go for that to say we are awarding cost against the tax authority, and the cost is supposed to be for them to cover your cost of litigation for bringing a frivolous action against you in court. So there are those provisions that are those avenues or those mechanisms that have been made available to discourage frivolous litigation on the tax authority side, and also allow the taxpayer recover some of their monies as well. And also, finally, I think I want to also add, if as a taxpayer you think the tax authorities have been unreasonable, they've been harassing you, and you can go to the tax ombudsman. There's a new regime now for a tax ombudsman. That's like an independent arbiter between the tax authorities and the taxpayer. So that's another opportunity. That's another framework that has been put in place to also help resolve some of these disputes between tax authorities and taxpayers. But ombudsman is only in relation to administrative procedural matters. if it has to do with assessment, where they've said you're owing taxes and you want to challenge the assessment, you don't go to the ombudsman, you go to the tax appeal tribunal. Ombudsman is where you're just complaining about maybe the conduct of tax authorities and how they've been, but you're not challenging an actual assessment. That's when you go to the ombudsman.
Thank you very much, Mr. Kelechi. So this participant is asking, please clarify this tax ID NIN issue. Yeah, I don't think we discussed this during the call. I don't know if Ms. Badijo can just quickly speak on this. The whole tax ID NIN that
Okay.
Nigerians believe, yeah, they are supposed to get.
Okay, so let me start by saying that now everyone has to get a tax ID. I think the need for that was because before now, we have taxpayer ID for different states. So there is me working with Lagos State that has, Lagos State taxpayer ID. And if tomorrow I get another job with Rivers State, I have to get another taxpayer ID. And what you see is that one individual is having like 3, 4, 5 taxpayer ID. Now, what they're trying to do with this new tax ID is that you would have just one unique tax ID, regardless of wherever you're working or wherever you're remitting your taxes to, something similar to your NIN. Now, the question on there've been a lot of issues regarding this tax ID, even coming from the tax authorities themselves, because it's like they're saying different things at the same time. There was a time that they said that to get your tax ID, go to the JTB portal and just put in some details and you get your tax ID, which a lot of people did. And recently again, there's a new portal, the NRS portal, where you just go there, input your NIN, and you get your tax ID. Also, there was a video that went viral where Mr. Taiwo was saying something about it's even possible that you might not even have to go through getting a tax ID anymore. You might just use your NIN. So right now, what I would just advise everyone to do is stay calm and just wait for that clarity on this old tax ID and which of the generated tax ID was supposed to use. So yeah.
Thank you so much, Ms. Badijo. So unfortunately, we cannot take all the questions. I'll just take one more question. But please note, all the questions that have been put down here will be answered via email, and the team will send the responses to everyone. And for those that still have further questions to ask, we will be sharing our email with you here in chat box, and you can send your questions there, and everything will be answered all together. So my last question for the speakers. So this participant says, as a freelancer who uses virtual accounts from platforms like GigPay and Clever, how does this tax thing affect me? Do I calculate from the money that enters my virtual USD account or when I withdraw to my local Nigerian account? Mr. Dakpo, I don't know if you can take this question quickly as we round up.
Okay. I'm not very familiar with those platforms.
Would you like me to take the question again?
Okay, please take it again.
Okay. Okay. So he says, as a freelancer who uses virtual accounts from platforms like GigPay and Clever, how does this tax thing affect me? Do I calculate from the money that enters my virtual USD account or when I withdraw to my local Nigerian account? So he wants to know how his taxes will be calculated, seeing that he has both a USD account and a Nigerian account.
So, like as I explained on the call, it is not your inflow that matters, although it's related and it can tie in certain transactions. It's the income you have earned. So, if let's assume you have 5 clients, 3 of them foreign and 2 of them in Nigeria, and you actively worked for them. Those 3 foreign paid you through the Clever you mentioned, the USD accounts. The Nigerian ones paid you through Nigerians. That income you've earned, right? You are going to aggregate everything for taxes, right? The only time when you bring in income into Nigeria from FS transaction that is exempted from tax is if it is dividend, interest, rent, or royalty. So if you earn rent from abroad, earn dividends, passive income generally, it won't be taxed. But active income that you've earned is taxable in Nigeria as long as you are a tax resident person in Nigeria. So what the tax, I'll just end on the note of, it doesn't matter the platform or the bank you use. What matters is what is your taxable income. What is taxable in Nigeria is what you will subject to tax when you are filing. I don't know if that answers the question.
Yes, it does perfectly. Thank you very much. Thank you very much, our speakers, for taking our time to speak to us on this particular issue. I'd also like to thank our participants for staying true to the end. I think we spent about 2 hours. Thank you very much. And to TaxStream, we say a very big thank you. Thank you for putting this webinar together for everyone to clarify whatever questions that they may have. It's been a beautiful time. I would like to say that if you have further questions, please send your questions to communications@taxstream.com. I'll take that again, communications@taxstream.com. We can't take all the questions in this session. And please note, a further session will be had. So we're going to organize, the TaxStream is going to organize another session just to address all the concerns that were not addressed here. So be on the lookout for that. Keep your ears out and ensure you tell someone about TaxStream's AI powered platform.
Yeah,
And
and they
on
should follow
this
us on
note,
social
I'll
media as
say,
well. So just to get
oh
more
yes,
information,
please
sorry,
follow us.
permit me to interrupt, yeah, I mean, so
Yeah,
we are
no
going,
problem.
so just follow us on social media. We are TaxStream everywhere. Just search TaxStream. On X, we are TaxStream, one word. On Instagram, we are TaxStream. On YouTube, we are TaxStream. On TikTok, we are tax_stream. So that's the only platform where we are not one name. On LinkedIn, we are TaxStream everywhere. So we just follow us on social media, and you would see more information around our next event. So we're having different events, Instagram live events, X Spaces, virtual meetings like this. So the idea is that we want to make sure that we educate people so they really understand their tax position, and while we are also solving their tax problems. So thanks to everyone that joined, and thank you to Dakpo and Perpetual.
Thank you.
Thank you very much, everyone. On this note, we will be bringing this session to an end. Thank you.
Bye, everyone.
Bye.